Good morning, good morning, good morning to everybody, all the premium members at Academy 55 and everybody else who's watching the recording. David Kahn here on Tuesday, the 22nd of October. It's 5 to 8 in the morning here in the UK, and we're looking at the EUR USD, specifically on the 1 minute time frame with the Academy 55 strategy and indicators. So, what can we see? Well, we got very important support and resistance lines that are being respected on the 4 hourly. We are above the purple line, so we have a buy bias, and we have I haven't marked it up because it's a different color, but if I put it on the hourly, even on the hourly, as you can see, we've got a lot of imbalance to fill up here, up here, up here, up here. And in the short term, if I put it back on the 5 minute, we can see that we've got a little bit of imbalance here, but that's about it. Everything else has been sort of taken away, really. So really, we could mark. I mean, primarily, I'd like to take buys because of what I'm seeing, but we are on a big buy at the moment. We may have a little bit of a retrace. So it's important to sort of sorry, I'm trying to talk and do two things at once. I'm a man. I can't do that sort of thing. Please bear with me. There we go. So it's important to, I'll mark that out because that may be important to us. Settings. It's a buy FEG. Okay, so that's that. So now put it down to the minute. So that's an important area that needs to be filled in the short term. So we were to take any short-term trade, this is what it would look like. And it would have to get beyond the purple line and also beyond that imbalance and beyond that support and resistance that's been respected, sort of. So pretty decent hurdles for it to cross. But primarily a buy, I think buy would be a better sort of alternative for us. Quickly, I want to go on to the US dollar index. I'm on the higher time frame now. Now, this has been the highest it's been. I'm on the 4 hour on the US dollar index. And just the same way as price needs to fill out imbalances, it also needs to fill out imbalances down here as well on the 4 hourly time frame on the US dollar index. So because of that, if that falls down, the US dollar falls down, it's going to be good news for the euro, which makes sense that the euro will be climbing. So that's another good reason to only want to take buys on the euro. So I would personally, this sell is good for us because I'd like to watch this sell play out and then take the next buy because of all these different things, all these things here. If it works, if the sell works, so be it. No worries. But I still maintain that taking a buy is the more clever option. We've got a buy zone down here. I can't see it going down to that levels again, but you never know, it might do. And it would be good for us, of course, if we went into the buy zone and then had another buy. The next buy would be the one to do, I think, rather than negate a sell, although I am tempted, obviously. Put the lines on. Oh, look at that. Trend line still green. I don't like these long volumes rushing down. Coming down to fill that imbalance, possibly. Like I said, I'd rather take the next buy. I mean, like I say, it happened so quick while I was talking to you guys. Too late to the party now, anyway. Might as well just oh, and the trend line's turned red. Look, and a 4.5 stop loss. We got all that in balance there. Like I said, is it going to go down to there and then bounce off that? Too late to take this one. And the favorite thing is for the buy. So you got to be really quick in this game, and I can't talk to you lot and concentrate on that as well. I was too busy saying my hellos. This is the 8 o'clock candle, which drove that one all the way down. A little volume came in. But like I said, I'd much rather take a buy anyway. Because I think that was going to be the main way. Oh, let's see, that it's coming up again ever so quickly. Long. This is the sort of position. That'll be on the trend line, wouldn't it? There. So there. 2 to 1. This is the sort of position. Is that a very strong support and resistance? Yes, it is. Will it have enough volume to go past that, which is what it needs to do if it's going to go for our next buy? I'm pretty glad I look. See how the candle came down to mitigate that imbalance that we drew up earlier on. Look, it's just done that. So it's done that. The reason for going down in the first place. That was a quick move by them to sort of equal out the imbalance, and now there's no reason for price to want to go down there again. Really, not as far as they're concerned. The banks I'm talking about. So we are waiting for the next buy, which suits me at the moment. Suits me grand because I think we're going to be seeing, because like I said earlier on, put it back on the hourly. There's plenty of imbalance up here. Reasons for price to get up to these areas here. And also, if it's to do so, it's going to prove that it's got enough to break this area here. Came down to mitigate that imbalance that I drew up earlier. Look, see that wick there? That sorted out that imbalance that I saw on the 5 minute. So go back to the 5 minute. Look, all that was in balance, and that was you can't see it, but there's a wick down there that took that out perfectly. That imbalance. So they balanced up the market again on the higher time frame. We've got a wee bit of imbalance here. a wee bit of a bounce on this candle here. And that will take us beyond stop loss if that's what indeed where we would have gone on this sell journey that we didn't do because it happened so quickly. So I'm pretty glad I'm out of that really. Although I can see the fact, yeah, price is capable of going down there and obviously take profit. Of course it is. But excuse me, I'm just making this smaller. But as you can see, price came down, took out that imbalance there, proving I'm not making these things up about imbalances really. So we'll remove that again now to keep the charts clean. Doesn't need to come down there again to do that. And now we're looking forward to the next buy, perhaps. And this is the scenario for the next buy. The trend line, got to wait for the trend line to go green. Keeping 2 pips away, so price has got to get over this line here. And could very well bounce along there for quite a while, maybe. Can do what it wants. They might know of some more volume coming into the market. We don't know. All we're trading is what we see. But yeah, the next buy is what I want to take. So we'll go. All right. Oh, have a buy alert. Give it 2 pips. Which is there, floating. Oh my goodness, right. See, if it breaks that, that's that support and resistance line. I'd much rather put the stop loss there on the wave because of the imbalance that we see here. Waiting for it to break that, basically. Break that, because that's the support and resistance line that we saw. If it breaks that, got the volume to break that, good chance we got a good buy on our hands. It's holding firm, that support and resistance line, because it's not breaking it as yet. I'm already up to a 3 pip stop loss. So in fact, I should be putting stop loss on there on the trend line. We'll see what it does, because that's obviously a very good support and resistance line, because it's holding firm along that line at the minute. But if it breaks it, we're in. Keeping 2 pips away, because that trend line will turn green any second if the volume carries on. Because the trend line is already pointing up, although it's staying red at the minute. Now that's even better, going down to mitigate that imbalance, and there's imbalance down there. Quickly, let's see what it says on the 5 minute. See, there's imbalance there. So if it breaks this support resistance line here, I'll mark that up. That is a fairly hefty support and resistance line there that is bouncing and breaking that I drew up earlier on the 4 hourly. I'm not switching over to TradingView at the minute because 10 seconds could make all the difference here. Trend line's turned green now. This is good. Let's see what this does. If it breaks that line and price is up here, I'm in. And if we have another sell, don't think I'll be really interested because we've got loads of imbalance up here. Nice to see many people on today. Hope you're having a good day. Had a good weekend and all that. The Academy 55 zones were cracking yesterday afternoon. Looking at it, and on the US 100 specifically, drew a few diagrams up in the Facebook group for you to look at. Well, one, I think. Sorry, I only did one. Right, so it could be coming down to fill out this imbalance before going up, or it might even come down to meet that again. We don't know. Don't really. Like I said, I'm more or less only going to be looking at buys. Because I can't see any really good reasons for price to come down. We turn it over to the US dollar, and we found that big imbalance it needs to fill. So the dollar's coming down, the euro will be going up. That's what happens. If the dollar's going up, the euro will come down. Complete opposite. So there's good reasons for the dollar to come down. So therefore the euro will go up. So this might be our fate for this time we have together, just anticipating when it's going to break that line there. Waiting for volume to kick in, hopefully, and bring price up here, in which case we will be on a buy. Keeping a respectful 2.2 pips away, actually. I could go to 2.1. Every pip, every tenth helps, I guess. So here we are. There's no red flag news, by the way. Oh, and make sure you've got your trade system up and running. You've got your risk to reward in purple, your lot calc in purple, your lines in purple. You've got the all important 1%, because that's what we risk per trade, 1%. No more than that. And I know some of you risk even less than that, 0.5%. So you just put 0.5 in there. But 1% is the norm. Sometimes when people go, you have to do this on your own terms. But sometimes if people have a live account and say they go like 2K below the what they started with, they might put 0.5% in there until they get to an even keel again and then try again. But that's down to your own thought processes and how you feel about that. But we don't teach that really, because that's just an individualistic thing. As a group, we trade 1%. Right, so no volume coming in at the moment. It's 8:15 here in the UK. We haven't got those, well, I'm tempted to go quickly to look. I'll very, very quickly look at the 5-minute. There's a zone down there. I'll very quickly, gingerly, horizontal ray, zone down there as well. But there's no sell zones as such. Quickly turn it over to the minute. So yeah, we would have been out of that trade. Hang on, quickly go back to the. There we go. That's why we only do like intensive, well, not intensive, but concentrate on trading for an hour. If this goes on for much longer, my focus and my like watching paint dry, and that could happen. You know, we could go along here, especially judging by the importance of this support and resistance line. It could go on here for until 9 o'clock, you know, or 10 o'clock even. You know, it's. But after 9 o'clock, that's me done. I'll be coming back later on in the day. I ain't gonna pander to this. It's all about lifestyle and spend all my days watching the charts. No, thank you. That's why part of the reason I made this indicator, so we don't have to pour over the charts for hours and hours and hours. It's just not the. It messes with your mind. Anything like me, I get bored. I get bored too easily. 5-minute again. There we go. So quite good. Our ourselves way down there, waiting for a deeper situation. I mean, all of a sudden, volume might come in to break that line. That's why we're bothering about it like we are. Sometimes on the half hour, maybe you might get a bit of volume coming in. Sometimes, like this case here on the 8 o'clock candle, we had a big volume down. Sometimes it happens that way, but not too regularly enough to call it a thing. And between 7 and 9 usually is directional trading. Other than that, you rely on volume. Well, you can't rely on volume EUR USD. There's bits of volume coming in, but no big deal for the volume. And that's what it's like most mornings. That's why we rely on directional trading. And it's pretty obvious it's a buy direction at the minute. Hence my and what I can see by imbalance being mitigated and all that. But we've got imbalance down here now on the 1 minute. What's it look like on the 5-minute? Yeah, a little bit of imbalance there. Look, it needs to be maybe sorted out before they carry on up. maybe, or they might do it later. It's all about timings. The banking big cheese might come in and say, "Okay, boys, let's uh, let's go and put a bit more into the euro." And all of a sudden, you'll see a bit of volume coming in and break past that, and hopefully, from our point of view, away we go. But we don't know. Right, is he going to break it this time? There's no sort of volume. Volume is decreasing, if anything. Are they like catching their breath before another push? Or is there Intel tells them to sell off a bit? We don't know. Just following. But this line here is we go back to it was drawn up earlier on. That line there has been respected. It's pretty good, pretty big. So that's the hurdle we wish to cross. Right, maybe this, oh, I don't know. In reality, we're only going up a pip or two at a time. It's minuscule sort of amounts, really, in the big scheme of things. But that 2 pips, yeah, but that represents $20 million. Takes $10 million to push 1 pip. So when you look at all that, it's quite a lot, really. But that's worldwide. Hang on, are we doing it now? Right, we're at that. Oh, we're just over it now. Not enough over for my liking. That's where I want to put. Right, that's enough for me. We've reached that line. I'm in the trade now for a buy. It may come down, it may wipe us out yet, of course, because we've got imbalance down here. But I was relying on the fact that we might have a bit more of a push, but it's not to be, I don't think. Oh, right. They are dancing around that support and resistance line. They've pushed it now, so the intent is there, but not the volume. And I might be taken out, to be fair. And if I am, that's 1% gone. I'll come back again when we really get into a zone, if that is indeed the case. But we've broken that line now, although I can see it's less than a pip. But that's the thing, when you're working with small details, I mean, the whole take profit up here is only like 6 pips, so it's not a big deal. So we are pushing the envelope really. Um, one bit of volume, one way or the other, could take us out. Let's hope it's kind and the volume, we have a buy volume coming in, but now it's broken that significant area. Is the intention there to go even higher now? for our case, I sincerely hope so. But we're in the trade regardless. And at this juncture, I'd be walking away, putting a cup of coffee on or a cup of tea or something like that. No point in watching it because your anxieties will not make any difference. It don't care. Sorry to tell you this, but price doesn't have any feelings. It doesn't care whether you need to. You shouldn't be trading if you need to pay the bills anyway, because you've got the wrong mindset. You should be trading because you're fascinated by price action, what it's doing, looking for a more sustainable, the discipline factor, looking for a more consistent sort of income, learning a skill for life, not hoping to, I really need to make this work because I've got a car bill to pay or a mortgage to pay or some sort of other bill, because you'll be looking at the charts differently. I'm hoping that line there now, although it was acting as resistance, is now acting as support. I'm hoping that's the case. But like I say, the amounts of volume we're talking is not high enough to sort of really think that could be the case, but it's a hope rather than a more of a certainty, if you know what I mean, because we're only dealing with a couple of pips here. So if an investor comes in and say, you know what, I think the dollar is going to revive and go even higher than it was earlier on, a big investor will come in and then all of a sudden that'll come down and take us out. Oh, right. Like I say, if it takes us out, 1% loss, no big deal. I'll come back again later when we can get a bit more volume, and also it'll be in the zones. Extra confirmation seems to really do well of price being in the zone. Yeah, I think it's dancing around this line, isn't it? It's proven it's broke. Can prove it's broken it, so that's good. But like I say, the differences are very small. Wouldn't take a lot of volume to take us out, obviously. And it doesn't take a lot of volume to so we can get our take profit. But we're traders, we're trading, that's what we do. Last two candles, hardly any volume whatsoever. And they're dojis, indecisive. What should we do? What are we gonna do? Are we gonna carry on up or should we carry on down? What are we gonna do? Because we got imbalance down here. But we got a big imbalance up here. So what should we do first? What do we need? What do we do first? Are we going to do this later, or should we do it now and then carry on up? Everybody's screaming, no, carry on up. You need to fill out first. Everybody's screaming, but it's up to them what they do, obviously. But at the same time, like you said, it's only 1%, no big deal. I'll come back later on today when there's more confirmation of price getting into the zones. We're on the precipice. It's all depending what the investors are doing now, how they read the market and how they read it. We don't know. No, this is the boring bit. It's not an anxious bit because major choice, own it. 1% loss or 2% gain. That's the way it is. So we own this and work out with, well, me, I'm personally, I'm going to come back later on if we get taken out. And I think that's going to happen now. Looking that way. Oh, I mean, also, this is a sign the market's being very nervy. So really at the moment, trade in this sort of condition, right, well, we've had a reprieve. But I mean, we're talking really, really tight margins here. I mean, there's 2.5 between there and there. That's nothing at all. It's like looking over a cliff and standing on one leg. Are you are you going to be stable enough or not? Or are we going to topple over? That's what it's like. Mhm. Here we go. Now, a lot of you, if you're seeing that, you may be tempted to move your stop loss down. No, don't do that. Take the 1% loss because you don't know how deeper it's going to go. And I think we're going to be taken out, to be fair. And they could be going down to this area down here. So no, don't you dare move your stop loss. Take the 1% loss if that's how it's going to be, and come back again later on in the day when the conditions might be a lot better for you and you have extra confirmations of price going into the zone. So don't you ever dare think about moving your stop loss to accommodate that. That's just foolhardy. Come on, then, if you're going to take us out, take us out. Come on, be a man about it. See, it's we're it's not sure what it wants to do. It's waiting for something, information perhaps, on how bad is this dollar going to be? Is it going to go all the way down and fill out that imbalance that we saw earlier on? How bad is the dollar going to be? Is it Should we wait and see what's going on? That's what they're doing now before we carry on one way or the other. And we're stuck in the middle of that with our trade, unfortunately. And now, because we're on the other side of this trend line, it's not looking so good for us. But hey, we're still in it. Only just. But like I said, don't you dare move your stop loss. Take the 1% loss if that indeed is what's going to happen. Own it, and then come back later on in the day when the conditions have changed. It's not so nervy as it is now. And maybe use the zones for confirmation on the EUR/USD and the US 100. US 100 after New York opens, after the stock exchange at 2:30 UK time. Conditions will be a lot more volume coming into the market then. That's just such a lack of volume here. It's like I said before, it's just like looking over a volcano standing on one leg. Gust of wind comes, over you go. If you were looking at this, in one way, this is a good thing because this will show you personally how anxious you are and you could be. If you're biting your toenails and biting your fingernails or whatever now, maybe trading's not for you. Well, trading might be for you, but it proves to you don't look at the charts because, like I said, you ain't going to change it. You've made your decision now. You just got to live with it. So, so once you made a decision, don't. I don't like to think of anybody actually looking at this and biting their fingernails to the quick, and also their toenails to the quick. Who does that? I certainly couldn't do it with my bad back, but people do bite their own toenails. Anyway, but um, but if you're that sort of person, sure, you can carry on trading. Just please, for your own sanity and your own health, walk away from this now. Go down and, like I said, put the kettle on. Well, that was a bit of a reprieve. That was so near. I was, yeah, wow. That was luck on my part, really, because another trader would have come in and maybe had it up there, level with the trend line, and he would have been out. So I might just get away with this, but I don't want to talk too soon, obviously. See, 2.1 pips, I would have been out. But as you saw with I was down here. 2.5 pips, I think it was, wasn't it? Yeah, that's where we ended up. So that brings my 2% up to there. Drag that one across now. I mean, it's going up very, very nervously. Got imbalance here now. But we've also got imbalance down here. Now, what's it looking on like on the 5 minute? See, on the 5 minute, those imbalances aren't there anymore because that wick there sorted that imbalance, which is good. But you notice we've got the purple line here beyond our 2%. So the only thing I could really do, let's have a look at the bigger picture. Put it on the 15-minute. We've got imbalances here on the 15-minute, which is good. I like to see that. Also there. Also there. So, but for the immediate term, on the 5-minute, we've got up here, I'm going to mark that out actually, as 1.08334. And we'll go there. I'll use that line, 1.08334. 3, 3, 4. That's the purple line on the 5-minute. So I might consider, I might consider either put my stop loss. Oh, well, that was good. That was good for us. Wow, and a big piece of volume coming in after all that. At what time was that? 8:41. Big piece of volume came out, and we got our 2%. So, wow. I'll throw open the chat so you can all say what a clever person I am. So, no, you don't. But if you have any questions about what you just said, amazing, says Anne. So if you have any questions, please write them in. I'll try and answer them for you. Amazing. Well, yeah, that was nice for us. They decided they wanted to wake up and fill out this imbalance that we're seeing here. So that was quite good. I'll give it another couple of minutes. Ian Orford says, what a clever person you are, David. Yes, I know. I've got scrolls and certificates and everything. I tried to inject a bit of fun into this because if you didn't inject fun into it, you'd be AI. Ian van der Heide says he never doubted me for 1 minute. No, it took a few minutes, didn't it? Ian Orford said he actually came out of break even. Well, there's nothing wrong with that, Ian. You saved your equity, and that's the main thing. But that's why I go with the idea of just accepting a 1% loss if that's the way it's going to be, because we are talking. I mean, we were talking about very minuscule bits of volume for several minutes there, and then they woke up. The bankers had a cup of coffee or whatever, sat down at the desk and thought, let's work out what we want to do with this, and then eventually they, as you saw, we had a volume of let's measure that. How many pips was that? So from there, yeah, what that candle there, 29 all the way up to 8-pip move in 1 minute. So, oh, sorry, I'm on the 5-minute, aren't I? So it wasn't that. It was, so that's 29, 34, 5-pip move, which is a lot bigger than we thought. Head banker sat down at his desk and thought, yeah, we're going to, Raj is on a nice little profit. Manually traded as still trade assistant is issues, but nice morning. Right, okay. So well done, Raj. And now I can go about my day. No more trading for me today. No more trading for you today. But if you want to practice, just paper trade, whatever. But yeah, so putting on the higher time frame. See, we're above the purple line now, so indeed we are on a directional bias. Put it on the 15-minute. See, we've got imbalances up here, look, that need to be filling on the 15-minute time frame in this area here. We've got another important support and resistance line there. Because look, hang on, just turn the indicator off a minute. See here where it's been respected with the volume of body of the candle. Put it on the line chart. Look, this is why that line is there, because there it was support. Then we went up, and here it was resistance. So that is a very important line as well. Just like this line down here, resistance, resistance, and it was resistance for 23, for actually 2 or 3 hours. So that was an important line. That's why that line was drawn in there. So yeah. So with that being said, guys, I will see. Oh, Thursday. I might as well point this out while we're here. Thursday. Let's do this. Hang on, drag that in. Hang on, why can't I get rid of that? Oh, there we go. That's why. Yeah, Thursday, if I drag it down to Thursday, we've got high impact news for the Germans. It's all going on Thursday morning at this time. So got a day off on Thursday. But tomorrow, tomorrow morning, nothing. So see you guys tomorrow morning, same time. Be there or be square. Thanks very much for your time. Have a great day today, and cheers for now. Bye.